Welcome, everyone, to Let's Talk Real Estate Investing. In this series, I chat with real estate investors from all different stages in their journey and real estate investing service providers to help empower you to build your personalized real estate investing strategy. My name is Debbie Balfour, and I'm a real estate investing success coach. I help and coach my real estate investing clients to personalize their real estate investing strategy and scale efficiently so you can start enjoying financial and, of course, time freedom. Each of us are unique, so therefore our strategy should be unique to us. If you enjoy this podcast, I'd like you to ask of you to please hit that like button and subscribe to my channel so that you can get informed of when we have the next podcast that's being dropped. Joining me today is my special guest, Leo Young. So Leo is a seasoned real estate investor and entrepreneur. He's the co-founder of Cornell Communities with a vision to invest in affordable housing and provide strong risk-adjusted returns for its investors. With a robust background in real estate and a track record of success, Leo has orchestrated over $50 million USD in real estate transactions. He's played a pivotal role on the acquisition team of a $4.5 billion private equity fund and also has been involved with a number of real estate investments, such as a general partner, limited partner, and joint venture partners. In his past life, Leo was a #1 regional salesperson for Tesla, which shaped his work ethic, his vision, and his optimism. He holds a bachelor's degree in finance from the College of New Jersey and a commercial real estate certificate from Cornell University. He's driven by a mission to positively impact the lives of a million people. Leo is committed to leveraging his expertise to make meaningful difference in the world. I am so excited to chat with you today, Leo. So tell me a bit about your personal life, where you live, etc., and then we'll go into real estate.
Yeah, thank you so much for having me, Debbie. That was a wonderful introduction. Very excited to be on. Yeah, so quick intro about myself. I'd say personally, I'm based in New York City right now, have been in the Boston area for 10 plus years. And pretty much, I mean, as long as I've remembered, I've been interested into investments and, real estate just sort of came out as a vehicle to me, early on in my career. So, very, very fortunate to have that shape out the way it was.
You're married, and tell me
I
a
I
little
will
about
be
your
actually
family.
next week or in a week and a half.
You're getting married, so
Yeah,
congratulations. That's
thank you,
awesome.
thank you. Very excited.
So what grabbed you about real estate investing that made you say, this is the thing I want to do?
Yeah, great question. So I think real estate to me initially, what got me interested into it is, I mean, I've always heard that wealthy people invest in real estate for one reason or the other. So that's what got me interested in looking into it. But what got me to invest a lot more of my time and efforts into it was that, I saw that it's a good vehicle to have a positive impact in whatever you do because you're offering the service of housing, for example. You're providing an essential service to economies, and hey, you can make money along the way. So it's sort of like a win-win.
Excellent. So can you give us a summarized version of your journey so far in real estate?
Yeah, so my journey thus far in real estate, how I first got into it, I was working at Tesla. I was on their sales team. I was doing very well, but I just felt like it was inconsistent. Like I would work very, very hard and like, smash these sales targets, and then great, like the first of the month came along, and I'm like, okay, start all over again. And it just felt tiring, to like go month after month after month and like really have no security in my income. So I started looking for ways that, sort of gave me that feeling of security. Did some research, came across passive investing. And yeah, I mean, I saved up some money and then I did my first LP deal and started generating cash flow that way. And it was sort of like a light bulb moment for me when I first got that distribution check. Because I was like, wow, like I didn't have to do anything to get this cash. I mean, it just comes in like clockwork. So, for me, like that got me thinking, how can I leverage my time to get more? Because then I can work very hard in my job and then create that stability through leveraging private investments, through passive investing and things like
Mm-hmm.
that. So that's how I initially got into real estate and then sort of flourished from there. I got so interested, I got my real estate license, started helping people buy and sell, and then worked at a fund and then started my own. And here sort of I am.
Excellent. So I love your background. Tell me a bit about your background.
Yeah, so my background, I was in sales at Tesla, started investing, and then I transitioned to being a real estate agent. So I figured that's the best way to sort of get that experience because I can learn while earning.
Mm-hmm.
Um, that way I shortcut my growth in the space. I really didn't say no to a lot of different transactions. I know a lot of realtors, they like to focus on one specific market or one specific asset class. But for me, I've done residential, commercial, leases, sales, rentals, all sorts of things in different markets because I was just so curious to learn and just figure out how to get good at different kinds of things. My one criteria for clients is that I only like to work with people that I personally get along with. And I have forgone many commission checks because I just didn't feel like I was a good personality fit for that person. Because my work ethic is that I will go above and beyond for my clients, and they best appreciate the work that I give. And if I don't feel like that appreciation is there, I respectfully bow out.
Yeah, I
'Cause
love
I work
that.
too hard for my clients. Like I'll be up at midnight writing offers, doing all these things because like I don't care. Like I want to learn and I want to help.
Mm-hmm.
Um, so I was very picky with my clients that way.
Excellent. Um, what was your turning point and made you realize that you had to escape this salary, hamster wheel and work towards financial independence?
Yeah, it was like I mentioned earlier, it's like just this feeling that you're working every month. And when you realize that if something happens to you, like I mean, God forbid, like if a car crashes into you, like sure, I mean you might get some insurance, but like what's going to happen afterwards? There's nobody else taking care of you but yourself. And realizing that I didn't have that safety net. Like, I mean, a lot of people, they don't have that safety net and they just continue on this hamster wheel of going to their job, of their clocking in, clocking out, and just hoping something good one day happens. I think that's a fool's remedy because, that end will never come.
And
So,
a lot of people feel like their jobs are security, and it isn't.
right.
It isn't secure at all.
As secure as people want to believe, even the most stable companies, they fire people. I mean, a business is a living and growing being, right? You hire people, you fire people. Some people get let go. I think I was fortunate in the sense that I was working at Tesla, and that was a super dynamic company. I was working for them, their third and most recent time. They had a bankruptcy scare, so things were very extreme there, and I got to learn sort of what it was like to be in corporate America in a shortened time frame. So, I figured I didn't quite like that. I want to build my own stability and take life into my own hands. And that's what led me to, investing and things like that.
So, could you, so speaking of investing, and I really, that's one of the reasons why I reached out to you is your strategy is very niched. Can you
Yeah.
tell us a bit about your niche strategy?
Yep, absolutely. So our firm, Cornell Communities, we invest in affordable housing, so manufactured housing communities. or mobile home parks, as you see behind me, because it's a way to offer good to the economy. You know, you offer affordable housing and you improve communities while making returns for investors. So, you know, going back to what I said earlier, I really like to have a positive impact in what I do. You know, I go above and beyond to those that I help. So this was kind of like a win-win way of spending my time of delivering value, you know, to the marketplace.
Definitely. And how are you structuring what you do?
Yeah, so we typically do it in a way that our investors, they're completely hands off. So our company, we do everything from sourcing the properties to closing it to signing on to the loans. You know, we're putting our asset at risk to sign these loans, operating them, property management, asset management, investor relations. So we do essentially the whole 9 yards so that our investors, they don't have to do anything other than, you know, pick the deal that they like to invest in and invest.
So do you purchase these mobile home communities? Do you purchase them already turnkey or do you purchase land? How do you go about doing this?
Yeah, so we purchased them ready developed. So very few, at least in the US, there's very few new manufactured housing communities because it's just very hard to get the zoning approved by the government. So for us, we purchase existing ones and then we improve the operations, whether that be bringing in new homes or, you know, improving the profitability, you know, raising the rents to the market, reducing the expenses, etc.
And are people renting these homes or are they purchasing them? How are you doing that one?
It's a mixture of both. So generally, we have more residents that own their own homes than residents that rent the home from us. There's a few reasons that we like to, we call these tenant-owned homes, that we like these kinds of homes, is because A, it gives them a sense of ownership, right? You know, they own their own asset, it can appreciate in value. You know, we've had just one example, we've had residents that they have, you know, 30-year-old homes that you can buy a new one for $50,000 that because of the investments through the years to the community, they could sell it for 120,000 for a used home. So they get that appreciation on the back end. You know, we're generating wealth for them. They're taking care of their home. It takes the liability off of our books. You know, we're not having to respond to a lot more maintenance calls and things like that. So it all sort of works in that way.
So the ones that you're doing that you are renting, are you doing them as rent to owns?
Yeah, it's a mixture of both. You know, for each marketplace, it's different because we're in sort of three different marketplaces. So we're in the Midwest, the Southeast, and call it the tri-state area. So like Connecticut, New Jersey. And for each market, it's like a different dynamic, right? Depending on what the demand is, what the supply is, et cetera.
Mm-hmm.
We'll experiment and figure out what makes the most sense.
I love what you said, and it's that's triggered in my mind is that you could buy some of these homes for like 50K, but then they're worth because in your community, so by the community being brought into, it's now worth like doubled at least of it because you're providing that all those amenities and that community and that community then drives the value up. So you bring in these manufactured homes and then you've got
Yeah, exactly. I
value.
mean, I think for us, just as you know, investors, a lot of people forget about this, but when you're an investor, you're really an allocator of capital, right? Because you're choosing to fund certain projects, and for us, we really try to think of like what is impactful and also profitable, because you know everything has to balance out, right? It's all an
Mhm.
equation. So for us, we're lucky to sort of find this formula that seems to work. You know, we give residents the chance to build equity. You know, we take some liability off of our books. It also increases the profitability of the property, which consequently improves the value. So our investors are happy. So it's sort of like a win-win-win.
And you keep on generating money because these. that space is actually leased, that the home is on, right?
Exactly. Exactly. So the residents, they would lease the lot that the home sits on with us, and we
Mhm.
manage the utilities, we manage the roads, the common areas, etc.
That's amazing. I love this strategy because here in British Columbia, where I am, they're always talking about affordable housing, and building affordable housing. But honestly, when you're building an apartment building here, it's so expensive that the rent, there's no way it's affordable. It's
Right.
a, you won't, you don't have low income people cannot afford it. It's so expensive.
Yeah, yeah. And just it's a similar situation in the US with affordable housing. These developers, they're building these huge 200, 300 unit housing complexes, but the number doesn't make sense unless the government is actively writing subsidy checks. They
Hmm.
have incentives for developers to build these homes, and even the renters, with Section 8 in the US, the government is paying part of your rent every month to make the equation work out. Whereas for, manufactured housing communities, mobile home parks, it's a different equation because a lot of them, they own their own homes. They don't need that sort of government subsidy. So it's a lot less burden to call it the taxpayers to fund this kind of affordable housing.
Yeah, I think it's amazing. I think we need to find more here in BC of that because I'm honestly because our government is not funding our developer.
Mhm.
Our government is not funding a lot in the way of, the tenants. So
Mhm.
it's a very expensive place to live. Probably like more like California for you guys too, right?
Right,
Um,
right.
so
And yeah, I mean, just right before we started recording, we were talking about our travels and stuff, and
mhm,
there's just so much that you can learn from observing different societies and how they function. There is no one perfectly right answer for everyone, but going to different countries, seeing how they operate. Like for example, in Hong Kong, right? They choose instead of tax incentives for certain things to drive operations like in the US, you have depreciation, right, to drive capital investments. In Hong Kong, they have government grants. So, they'll fund certain kinds of businesses. They'll give you money that doesn't have to be returned to start that kind of business. Whereas
mhm.
that's kind of rare in the US or different places. So, when it comes to things like affordable housing, like you could sort of see like how different societies operate and handle that issue.
Yeah. I think that's great. And that's why I do this podcast too, is to share what everybody's strategies are. So you can like pick up, oh, I like that. And it may not be in, specifically in that strategy, the thing, but that idea you can bring into your own and make that unique. So I
Yeah,
love that.
and
Yeah.
and just jumping in, I think that's so important why you should be talking to different kinds of people to just get that different perspective, right? And tying back to just earlier in my career, in my real estate career, that's why I didn't choose to niche down in a specific asset class early on. I was helping different kinds of clients because I wanted to just be a sponge to the industry. I want to learn everything. So as a consequence, I spoke to many different kinds of people from all walks in life, from, renters that, took government subsidies to, successful sort of entrepreneurs, they made their own way into real estate to like ultra mega wealthy people that just made their wealth other ways and like how they view this vehicle as real estate. And it was just fascinating to see everyone's different take on it.
Hmm. That's wonderful. So speaking of all these different takes on it, speaking to all these different people, can you walk us through your strategy for multiple income streams? Because we know that, they say that you should have at least seven income streams, right? So talk to us about this.
Yeah, yeah. So the quote that we hear out there is that, the average millionaire has seven income streams. I think there's two parts to it. I mean, the first part is that um, you don't need seven income streams to become a millionaire, but rather that you become a millionaire and you have a few different income streams. And that's because there like I said, there is no one right answer to things. And, obviously this is not financial advice, but um, people like to have a sort of balanced investment diet. Maybe I'll keep some money into bonds that's super safe, that just, if there's a rainy day, like I can tap into it, but it doesn't grow a lot.
Mm-hmm.
But then, they'll take some risk with, private investments that have higher returns and higher cash flows. And, that's a different vehicle as well. They'll keep some in stocks because stocks is just like, who knows where it's going to go. But it's nice to keep in. So, they'll have different pockets like that. And through their career as an investor, you sort of figure out like, what do you like? And, your balance in each of those buckets changes over time.
Yeah. So what's your strategy for your multiple income streams?
You know, I have to say I really do have like quite a few different income streams, and just like I said earlier, it's about having a balanced investment diet.
Mm-hmm.
I have some in cash for like the oh crap kind of fund. I have some in stocks just for that kind of stable, call it 7% growth. And then I have a decent amount into private investments, private debt, because that's what really moves the needle forward, because you're able to, on average, get much better returns in those than the public market, because there is that illiquidity premium. So it just means that you can't readily sell that investment, right? Whereas I can, if I own a stock of Apple, I can sell it today, on Robinhood by just flicking my finger.
Yes.
So there is a premium to that. And Warren Buffett has this quote, is like, um, I'm going to butcher it, is that the best way to build wealth is to not interrupt it. So a lot of people, they get scared, COVID happens or something happens, they sell their stocks and like they put it in cash, and then they realize, oh crap, I just missed out that 20% gain in the stock market. If you
Mm-hmm.
look back in 2020, right? Middle of March, the S&P tanks, and then in May it shoots up.
Whoosh. Yes.
I've had friends that they sold all of their stocks because they're like, the sky's falling. I don't know what's going on.
Mm-hmm.
And then they end up missing that huge gain.
Yeah.
So um, that's important to know. Just don't interrupt your wealth to compound, right?
Yeah. But just have some mitigation strategies so that you can keep it
Yeah,
going. Definitely. Yeah,
exactly.
I mean, we COVID also that happened with the housing market. Everybody said like they predicted that, oh, because of COVID, the housing market was going to crash. And it did a little dip again to a little bit, and then it just went mad, actually. It went the
Right.
opposite direction, right? So,
Right. And funny you mentioned that. And it's like, there's a lot of things that you'll hear in the marketplace in terms of news and all that stuff. But, as an investor, you have to really just figure out how to separate the signal from the noise.
mhm.
Because like when there's news articles saying like the sky's falling, but then, maybe you take a step back, you're like, okay, what is the structure of the economy? Okay, if the Fed is reducing the interest rates, then that would increase the value of the existing assets, because the existing assets are finite. So then
Hmm.
if you put two and two together, you're like, okay, well, asset prices should go up. So
Yeah,
it's
definitely.
tough to tell.
So, what are some of the biggest mistakes or limiting beliefs that keep people stuck on their hamster wheel at work? And I recently did a live saying to people, don't quit your job right away. So, what's that quote that your job is like work on
Just
your
overgrowth.
job and your part time and build your wealth part time, right?
Yep. Yep. Definitely. I think what you mentioned earlier, Debbie, makes a lot of sense, is that you shouldn't, and obviously not, again, not financial advice, but
Hmm.
don't quit your job to go all in on something that you feel very strongly about. Um, that is what the 0.00001% of people do, people like Mark Zuckerberg, but chances are you're not him. You're a regular person. You should pay your bills. So you should keep your job, and on on your, so you keep your 9 to 5 and then your 5 to 9, then you sort of learn how to invest, what interest rates are, how they affect the economy, right? And then slowly build up your safety net that way. And
Hmm.
then when you get to a point where you're just feeling like you're tugged in two directions, then you make choice, but not before.
So, what do you think are those limiting beliefs that keeping people stuck?
Yeah, I think a common one, especially in real estate, is that you need a lot of money to start. Um, that's a common one just across the board. People, for example, they think they need to put 20% down to buy a house, and then they learn from, realtors posting on Instagram that, okay, you could buy one with 3.5% down. But then, when it comes to commercial real estate, then people are like, okay, well, you need big bucks to do that. Um, but then they learn about private investments, things like syndications or real estate funds and things like that. And, you really lower the barrier to entry, to from like hundreds of thousands of dollars to now it's like 100,000, 50,000,
Mhm.
25, even less. So there are ways to get in to learn about the industry. And one way that I did my learning is that I invested so that I care about it. There's this notion that you care about what you have money behind. It's one thing to read about something on a textbook, but then it's another when it actually is giving you, money every single month or something like that. So it's something that you care about. It becomes tangible.
Having skin in the game is
Exactly.
definitely, yeah, definitely.
Exactly.
Thing. But you're so right though. I had those limiting beliefs also. I thought, and but that's because our culture makes it sound like I thought that you
Mhm.
had to be rich to invest in real estate. You had to have lots of money. You have to have a savings. I totally forgot I had money in my home that I could have used. Like those things didn't occur to me that that I did have money that I thought, oh, I need to this. I don't have any money because I spend all my money on my kids, right? To give them a good education, to give them, give them a good life. So we didn't have a savings, but we did have a lot of equity in our home.
Right. And very interesting that you say that, Debbie, because I mean, you and I think I'm an immigrant. I forget if you are,
Hmm.
but I mean, as an immigrant, we're sort of like fed this reality that's, served us at one point in time, which is typically to save, 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 and like not spend on anything and like not invest in anything either. But then, we come to a place like America where, the opportunities are endless, or like Canada example. But we don't relearn the financial game. Every economy has their own financial game, and it's very important to learn how it works. And then you figure out, okay, how do I play this game to get the outcome that I want? And a lot of people, they forget to do that. They stick with their old beliefs from their previous country or things like that, and they never change. And that's why they end up with what they have.
Definitely, yeah. And but also, I don't believe in this in everyone that says you can invest in real estate for $0, but it is you can do a small amount, but also there's that sweat equity part of it,
Mhm.
right? But you do have to educate yourself first. So that's where I don't believe in that $0 because you have to put money in to educate yourself.
Exactly. And the people that say, the zero down thing, it's just clever marketers figuring out how to put it, because $0 down on something will catch your attention. I mean, hey,
Hmm.
look, you want to find there is a way for you to learn about real estate while coming up with $0 out of your pocket. Guess what it is? It's getting a job in real estate. It's working for a real estate fund. You
Yes.
have zero risk and they teach you everything, right?
Or you're teaming up with an existing, like, offering your services for free, working with another real estate investor and learning from them. So
Exactly.
there are all these. So, what's your why? For all of us, we have a why of what we're doing, especially when we're out of the, corporate 9 to 5 hamster wheel. But what keeps driving you? now as a professional real estate investor?
Sure. I think my current mission is to positively impact the lives of 1 million people through real estate. And that why came about just fundamentally, I love philosophy, but it's the notion of that I'm a guest on this planet. And, as a guest to a place, I'd rather leave a place in a better condition than I found it in. So I want to be able to positively impact people, whether through, offering housing or helping people build their wealth, or even sharing ideas on a podcast like this to really just get the wheel turning in the right way and sort of be that change that you want to see in the world.
Excellent. When we chatted, you have a special offer for people listening. So what is that special offer?
Yeah, absolutely. So if you'd like, first off, reach out to me to connect. I mean, I'm very active on LinkedIn and Instagram. Find me Leo Young, Leo-Young on LinkedIn and Leo Young Real Estate on Instagram. But my special offer is that I wrote an ebook of how you can get into private investments, how you could start building that passive wealth. It's designed to be a quick crash course, and I'll give it to you absolutely free. Just reach out to me either on LinkedIn or Instagram, and I'll send it to you for free.
Excellent. And what we'll do too, we'll also edit into this video your contact information, how people can contact you, and a little bit and a link also for that free offer. So, thank you so much, Leah. I really appreciate your time. I really appreciate getting to know you, and I'm really excited about what's to come for you. Speaking of that, where do you see yourself going?
Yeah. Well, first off, Debbie, thanks so much for having me on. I think it's always a pleasure to talk about real estate and to share some ideas, and sort of to tie it into life and all that stuff because everything is really connected.
Mhm.
But what's next for me, I think, is to build up this vehicle. So this vehicle being the company that I'm running to offer passive investments to people and to offer affordable housing to the marketplace, and to see really how big we can go. I think the challenge is like how do you grow correctly? I mean, there's so many challenges of running and operating a real estate fund like this that we can go to another time. But for
Mhm.
now, it's to grow this, see where it takes us, and take it from there.
Awesome. Thanks so much. Once again, everyone, if you enjoyed this podcast, please hit the like button and subscribe so that you can hear more from other real estate investors and real estate investing service providers. And reach out to Leo. His contact information will be shared with you, and he's an amazing person to chat with. He's got so much great information, so much of life already, and you're young. I mean, I wish I knew what you knew when I was your age, but we can't turn the clock back. So, we start from where we are.
Yeah, I will say one last thing is that everyone has their own timeline to things, right? The time that we spend, it's beautiful that we have a finite amount of time and we spend it differently. So, when I was spending it on this aspect of my life, you might have spent it on another aspect. So, everyone has their own time frame. It's never too late or it's never too early to start. What matters is that you take the next steps. I think that's the most important part about learning is to take an active role in your learning, in life in general. So, if you found any ideas through our conversation today interesting, then look into it. Google it or use ChatGPT or anything. Just educate yourself and make yourself a better person.
Wonderful. Lovely way to end the podcast today. Thanks so much, Leo, and have a wonderful day.